Welcome to Dollars and Cents with your host, Jeff Davis and Chris Coleman from Falcon Financial Management.
Good morning, Gainesville, Ocala. It is Saturday, March 2nd, 8:32 a.m., and you're listening to Dollars and Cents with your hosts, Jeff Davis and Chris Coleman. Jeff Davis, certified financial planner, president of Falcon Financial Management, creator of the integrated wealth management process, and a man recognized by Barry Magazine as one of the top 500 independent advisors in the country. Recently nominated to the University of Florida Athletic Hall of Fame. My name is Chris Coleman. I'm the managing partner at Falcon Financial Management. Behind the glass, happy and cheery, Miss Lisa Meadows. Lisa, how are you today?
Great, thank you. How are you?
I'm doing great. You're looking bubbly today.
I was going to say, do you have a date today or something? I mean, look at her.
And he scores. Three-pointer from 50 feet.
I refuse to answer on the grounds that may incriminate me.
Well, you look fantastic.
There's some
Thank
lucky somebody out there going, oh, yeah. Yeah,
Good for them.
Good, bada boom, bada bing. Hey, folks, I'd be remiss if I didn't mention on March 12th, which I believe is Tuesday, 12 o'clock, at Ferris, we have our first Planning for Life meeting, which is designated for the...
Actually, it's a week from Tuesday.
A week from Tuesday.
Yes, a week from Tuesday.
I thought I said a Tuesday, but
a
week from Tuesday, correct, March 12th, 12 o'clock at Ferris. This is a program that's designed for the faculty and staff at the University of Florida and Santa Fe Community College. It'll be held quarterly. We'll have different types of speakers, but the idea is to address your specific set of issues.
And I would also extend that, Chris. I know that we're primarily what we're talking. We do a lot of business with faculty and staff at the University of Florida and Santa Fe. But if you're a state employee and you're anticipating retirement, you're in the same retirement system as the faculty and staff at the University of Florida. It's a little bit different, but it's essentially the same thing. You don't have a 403B, you got a 457. So, there's different plans. And if you're a teacher, for example, in Alachua County, you're virtually in the same retirement system. So when you look at, it's the information that we're going to be sharing with everybody is if you're in the state of Florida's retirement system in any fashion, there's good advice for you. And I would also suggest if you're just planning on retirement in any way, there's probably benefits to this program. Essentially what we've done is at Falcon, we've made a commitment for the next 3 years to hosting Planning for Life meetings. And these Planning for Life meetings are going to be, these aren't seminars where somebody's selling you an annuity or somebody's selling, I guess we're selling something, we're selling advice, but we'll be bringing in some of the experts that we network with. So our good friend Cliff Copeland is going to be one of our speakers at one of these meetings, and we're going to talk about Social Security. That's what it's all about, is Social Security. And
that affects everyone?
Everyone. But if you're getting, you're 55 and you're saying, okay, well, what can I expect? When does Medicare start? Should I start taking it at 62, 65, 67? There's all kinds of options, rules, and ways to use your Social Security. And I'm just using it as an example, but that's one of those workshops that we'll be doing. And another workshop, we're going to be bringing in someone who's an expert in the state retirement system, and they'll talk about the state retirement system in general and maybe be able to answer some questions. We're going to be bringing in one of our strategic partners, Dan Chalmers, to talk in the fall about, let's get ready for taxes.
Codemus Maximus?
Codemus Maximus.
Codemus Maximus. That man knows the tax code. I mean, he is really good. But then you talk about these speakers, Cliff Copeland, close to 40 years. Recently, there's a man who has experience, knows the system, our speaker from the University of Florida, long in the retirement system. Those are people who really know the score.
Mm-hmm. And then what other topics are going to be of interest to clients and people that are planning for their retirement. Is long-term care something that you're getting ready to retire? What are the challenges of being retired? Long-term care is going to be one of them. Mm-hmm. So there's a couple of ways to approach that. One is, here's what long-term care is. This is what long-term care costs, and these are the ways to solve the problem. And then another approach to this that I'd like to do is, okay, how do you avoid long-term care? So we talk.
Preventive medicine.
That's
I
right.
Like it, yeah.
We'll bring in. There's a couple of people that we know here in the community, physicians who are specialists in aging, and we'll get them to come in and sit down and spend time with us and share. If you eat these kind of foods, you've got a better chance of keeping your your life expectancy healthy right till the very end. How do you keep your mind sharp? So, it's not, this is, planning for life, the next great life adventure. We talk about great life adventures all the time. And the great life adventure is what I think, I don't like the word retirement. So we developed a concept we call Great Life Adventure, the Great Life Adventure, which we've trademarked and registered and done all the appropriate things for, and it's to use for the future. And Great Life Adventures is, from this perspective, are when you finish working at wherever you're working, that next great life adventure is going to be could be one of the greatest life adventures that you ever have. For a lot of couples, they spent 30, 40, 50 years together. Now there's no children, there's no work. What do you want to do? Which can be pretty scary sometimes. So if you're not thinking about it, we want you to start thinking about it. And we're going to be hosting these meetings as a way of reaching out to the community and talking about planning for the next great life adventure that they have. So I hope that if you have any interest, give us a call, 352-375-7977. I think you can get, it's on the website too, isn't it?
Correct, at www.ffmonline.com, www.ffmonline.com. If any of these topics also are of interest to you, and maybe you're in a civic organization and you'd like us to, we'll take this show on the road for you, but you can give us a call at the office and we'll come sit, talk about it. If you have a specific topic that you'd like to talk about, just call our office. We can talk about it, work it out, and make something happen.
Yep. They got Antiques Roadshow, and I'm pretty antique, so.
You look good, my good. You look good, my good man. No worries.
Yeah, I'm going to be the healthiest, best-looking 60-year-old I can be.
Age is relative.
Is that Einstein's theory of relativity?
Yes, the Meadows theory of age relativity. In relationship to Einstein. Got to give him a little bit of credit.
There we go.
I love Albert. He's one of my favorite characters in the whole world. He shows up on my screensaver about every fourth or fifth picture. I've got just a bunch of great pictures of Albert. I just get inspired.
He looks like the kind of guy you could be sitting next to on a bus stop.
Yeah,
and have no idea.
I don't know. He's always got that pipe in his hand, and I'm a little suspicious what was at the bottom of that pipe.
Talk cosmic thinking, right?
Oh, that's cosmic thinking. Yes, yeah. I'm way ahead of my time, kids.
Well, we saw the ISM index, which is a number that you like to follow. We're getting some, sequestration falling to the background. What's the crisis du jour? Meanwhile, the ISM index comes in over 55. Scotty, what am I seeing here? We've got a problem. What are your thoughts, sire?
More power.
More power?
More power.
That'll always fix it, right?
Give me more power. I was stunned by the ISM index. It's been floating a little bit over 50, a little bit under 50 for months. To go up 10%, and that's what we just saw, was a 10% rise in the ISM index. Well, we're sure not. It indicates that the recession that I've been worried about isn't coming now. We're not in the middle of a recession. I thought we could be in the middle of the recession because originally the fourth quarter was negative 0.01. They've adjusted it so it's a positive 0.01. So we didn't have a negative quarter technically in the fourth quarter. And a recession is 2 consecutive quarters of negative growth. So now we don't have a negative growth, and we've got the 55 ISM. The stock market is stuck in a very thin trading range. You'll see this thing going from 14,100 to 13,800, back and forth, back and forth, back and forth. the crystal ball and we have access to certain information that the general public doesn't have. And we spend a lot of time studying and reading. I think we've talked about this before. I spend an hour or 2 hours every day.
Jeff Davis, human browser.
That's it. And very specific, but I want to know about the economy. I want to know about the markets. I want to know what the world is thinking. And for every person that says the sky is falling, there's somebody that says it's a bear market, it's a bull market, and the arguments are just as compelling. But as I search through that data and I look at some of the people that we use as advisors that I've had confidence in and they've helped us get through these last 10 or 12 years, they're seldom wrong. There's a lot of cash sitting on the sidelines. They're not investing yet. And we're sitting on a lot of cash and we're not investing yet. I don't have confidence in this $14,000 number. I think that they say once you everybody starts to get excited about the stock market, that's when it pops. Mm-hmm. And it pulls back 10%. A 10% drop in the market today, 14,000 drops you down to 12,600. Mm-hmm. That'll be stunning, but it'll happen. Mm-hmm. And then we'll climb back up, and you got to have that. You clear out the speculators when that happens, and the investors, the long-term investors. Then that moves forward, and then I think we're going to break through this 14,000 ceiling. I do think that this is going to be a good year in the stock market. I think there's an awful lot of noise in the system today, noise that is distracting, noise that is discomforting, noise that represents people who are, we've gone through the fiscal cliff. Now we've just gone through sequestration. I checked yesterday to see if planes were falling out of the sky. I didn't see any.
You didn't?
I didn't.
Oh, okay, good news. I was pretty sure that was going to happen.
I think, that, from what I understand, the world was okay today. Maybe, I'm sure that we have a client who's, her spouse works for one of the federal agencies, and, they started talking about furloughs. Well, they got to talk about them. But, there's other ways. They've had a year and a half to prepare for this. This was not a surprise. It was supposed to happen January 1st. They've had 2 more months to prepare for this. So that anybody, if there's any authority in the federal government that's scrambling around today trying to figure out how they're going to manage these cuts, they ought to fire them, because they should have been working on this for the last year. If they make cuts, how can I cut? Well, we're going to use, instead of buying paper coffee cups, we're going to everybody bring your own cup and wash it and keep it clean.
Is there any chance that deep down in the heart of both sides' soul that this was a way to make cuts and be able to point the finger at the other guy?
I think that's the way it's turned out.
Mm-hmm.
But if you remember the last presidential debate, there was a point where Mr. Obama stopped, squarely looked at this camera, and said
no new tax. No, just kidding.
He didn't say that. He said, we'll be with him in just a minute. The fiscal cliff, he said sequestration. Now, specifically, sequestration will not happen. And
bum, bum, bum. I see the smoking gun.
Yeah, it will not happen. Well, now you've got this big battle that's going on in Washington between Bob Woodward and the Obama administration, and they've both got their squirt guns out and squirting each other. Yeah. Oh, no, it was you. No, it was me. No, it was you. You lied. They're like little children.
Yeah.
I saw something with Rick Santorum talking the other day, and they said, you spend a lot of time out. You're not a senator in Washington. You still live out in Pennsylvania now. You travel around the country. What do you see? Who are they blaming? And he said they're blaming everybody. It's not just the Republicans' faults. And, the Republicans, they make an argument that they gave up taxes. And so for a balanced approach, now we have to have cuts. The Democrats, make an argument that that there's not enough. The federal budget's too tight for them to make any cuts.
That didn't work at home.
I get these looks of disbelief when I say that.
Well, no, but I mean, it's just like, if you're out of balance at home, you've got to make cuts. It's not. You don't get to lay claim to that argument. And I know there's the whole we can print more cash argument.
Absolutely. I mean, we can do anything we want to do, but what is the effect? And so much of what's being done in Washington today is illusion. It's making cuts 10 years from now.
Mm-hmm.
Okay, in the next 10 years, we're going to cut this, 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 and this. Well, I don't have any confidence that if they say that that's what they're going to do in the next 5 years, that's what they're really going to do, because some of those guys aren't going to be there.
Mm-hmm.
So what are they doing? They're protecting their turf today.
As a boy, they called that kick the can.
That's what they're doing over and over. They don't want it to happen. They don't want the effects of any cuts on or raising taxes on their watch. They want this to be down the road for somebody else. And somebody else will say, that wasn't such a good idea. We're not going to do what they said they were going to do when they said they were going to balance the budget by doing this, this, and this. We're not going to do that, and we'll just keep printing money. Oh, no. We'll make a cut 10 years from now. We can talk to Larry.
Larry, how are you today? It's good to hear from you.
Yeah, well, I'm doing pretty good. Yesterday, you're talking about a possible 10% cut in the market, and I agree. That wouldn't be wouldn't be unexpected, in my opinion.
It shouldn't be Larry. It shouldn't be unexpected from anybody. If you're an investor in today's markets, every year you should expect to see the stock market drop 10 to 20%, and it's going to happen.
Now let me throw you a curveball. You're probably not expecting this from me. What would you say to the market being over 20,000 within the next few years?
Well, I think that I've had a long-standing prediction of 20. You've got everybody in here trying to throw curveballs.
Yeah.
How do I get this twist?
You got it over the top. Two figures.
I'll give you some supporting reason why it might happen.
I will tell you that I've been long predicting 20,000 by 2020. So, it's not a huge leap. If we're at 14,000 today, over the next 7 years, if you just do the math, I think it's about 6.5% return on an annual basis. And we have overperformance cycles followed by underperformance cycles, and they last 15 to 17 years. And you can look back historically, and you can watch these cycles, and as they, look, the government, the economy did, the economy did poorly. 1970, 68 to 81, the Dow went from 1,000 to 1,000. It looked a lot like what we've gone through in these last 12, 13 years.
It's even a better map to look at. 1929 to 1933, 34. When the collapse took place in 1929, the market grew by 300% over the next few years after it hit bottom. You take that graph and you put it on today's graph from 2008 to today, it's amazing. It's almost an exact overlay.
Well, don't forget, though, in 37, you had a total collapse of the market that was almost like...
That's exactly what I would expect to see happen when the market hits, 20 or 22,000. We will have a total collapse. In my opinion, the reason why we're going to see it go up so much, I believe the bond market has already started to implode. And where are people going to go? You've got Europe in trouble. And as people start to lose money on their bonds, surely some of them will go to gold and silver, but a lot of them are going to go into equities, and they're going to force, an unbelievable bubble again back into the stock market, driving it up to where you believe it's going to go to. And then it'll end up being like jumping out of a frying pan into the fire, more or less, and we'll see a big collapse at that point. And then I believe everybody will then go, we're going to go now, and it'll be gold and silver, and we'll see it skyrocket. That'll be the fuse that's lit.
Well, this is a historical conversation, and if you look back historically, these problems come and they go, and they come and they go. Some people refer to them historically. We call it a depression, but in 1908 it wasn't a depression. It was considered a panic, and you go back and they called them panics in the past. So now we got depressions, and now we've got the Great Recession, and if you're a Democrat, it's the Great Bush Recession. If you're a Republican, it's the Great Obama Recession. You could tell what somebody's politics are by how they name this recession. But they used to call them panics. People panicked, and panics are going to happen in the future. There's nothing that's happened in the past that you can't in the stock market that we can't say is going to happen in the future. It's going to happen.
I believe it. 100%.
You're going to see cataclysmic collapses of the stock market. But that cataclysmic collapse of the stock market saw the stock market drop from a high of 14,100 in October of 2007 to March of 2009, and that wasn't even 2 years later that we saw it bottom out at 6,500. And here we are 3.5, almost 4 years later, and we're back to 14,000. So over a 7-year period, we've gone from the high of 14,000 to back to that high of 14,000, and we've had a big dip. I think that there was a lot of wealth that was lost because of speculation in the real estate bubble. People fled to real estate from the stock market that was blown up by the technology and internet bubble that burst in 2000. But if you look at the basic companies, if they weren't in the industry that was affected by the explosion, then they did okay in the 2000s. So if you looked at Procter and Gamble and some of those and financials in the early 2000s, they did pretty well. Now the financials were right in the meat of the collapse of the real estate market in 2008, and they got crushed. But if you look at other stocks, they didn't do so badly, and if they went down, they went down less than. Remember, the markets were dragged down by financials, even more than any other stock. But once those stocks started coming back, financials haven't come back that much. They're not back anywhere near their levels, but other stocks are not only at their levels, but above their levels to make up for the shortfalls in financials. So when you look at the stock market, if you have a good diversified portfolio and I know you do all of your own investing, but statistically, if you use a financial advisor like us, especially if it's a fee-based advisor rather than a transactional advisor, and that's a personal choice. People, if you want ongoing advice from somebody, then you got to pay them a fee. If you just want to buy a product, then you can go to Merrill Lynch and just buy, the XYZ Oppenheimer mutual fund from them, and they'll sell it to you. If you want to buy advice, you come to somebody like us. We bring about a 1.5% to 2% on average better return than individuals do. And it's primarily because we keep you invested when you don't want to be invested. We get you invested when you don't want to be invested. We get you out when you don't want to get out. Right now, people, you might recognize that this is a dangerous time, but most people are just looking at the stock market's going up. And if you look at the inflows from the bond market into the stock market, there's a lot of people who've made the decision, I can't take it with bonds anymore. I need to go into stocks.
Good move.
So,
yeah.
Larry, we only got about 4 minutes left. We got a couple other calls. Do you want to wrap it up with a question or a point? Because I know that I have a lot of confidence in your abilities.
I would put it like this: if you were a Japanese person and you were invested fully in 1990, imagine how envious they must be looking at what's happened here over the past what you just described.
Good point.
Here we are 20 plus years later. They went from over 30,000 in their market down to 7,000 crash, and they're back to around 10,000 20 plus years later. That's all.
Yeah, but that's you look at the NASDAQ. The NASDAQ was over 5,500 in 2000, and it's not 2,500 now. So if you bought, if you were invested in the QQQ, then that index, then you've got half of your money back after 12 or 13 years. It's and also remember that's a command economy. It's not they produce, but it's a command economy more like China than our economy.
Well, I just want to say y'all have a good weekend. I just had something happen recently that made me feel great. I went to a dinner where there were 700 people in the room, and I was one of the youngest people in the room.
Way to go, Larry. Way to go.
Have a great weekend, Larry. Bye-bye.
You too.
Thank you, Larry. John, you're on the air. How are you today? Oh, we lost him. Down he goes.
Oh.
John, I am so sorry.
Down goes John. Down goes John.
Oh, my goodness. Poor John, he waited so patiently.
Yes.
So patiently.
Well, let me answer John's question.
Okay, go ahead. The sky's blue.
Okay. I was just, what did John want to ask? Karnak says.
Oh, no. I hate that we lost John. That's bad, bad news.
Oh, hopefully John will call back.
Amen, amen. So, all these conflicting signals?
All these
What's a person to do?
In my opinion, today I would be patient.
Mm-hmm.
And it's very, very hard to be patient. Everybody's asking themselves, this roaring train just came by and I needed to be on it and I missed it. What am I going to do?
Well, and as usual, the media really helped us. Fire! Fire! Oh, it's a fire! Whoa. Well, that wasn't a fire. As a matter of fact, it was the best train ride I could have ever been on.
Yeah. Nope. It's John.
Hey, way to go, John.
Got to press that button. Somebody press the button.
You want me to
go? They got no button. I got no buttons. I'd press any buttons.
All right, John's on the air. John, how are you today?
Great, good. Thank you for taking my call again.
Oh, thank you.
This one is, I think, a simple one. It's more of a what would you do? If you were going to buy precious metals from a friend or like a family member,
Ooh.
what are you going to give them, 100%, 70%, 80%? I'm asking your opinion.
It depends. If it's, one of my close family members that I want to help, I'm going to pay him 100%. If it's my brother, I'm going to negotiate to pay him as little as I can.
Right. So what if it's just a friend of yours that kind of came across some stuff and he really doesn't have much invested? So, and I know what the rate goes for commissions and other places. But
sure. I would at least take, if you do a transaction, you're going to pay 15 or 20% for the transaction. So that would be a minimum discount from a friend.
John, we're hitting on about 30 seconds here. That sounds like as much an emotional decision as it is an economic decision.
But I just wanted another opinion.
15, 20% would be what would be a minimum in terms of transactional cost.
Sounds good. Thank you.
Take care.
Thank you, John.
Bye.
We appreciate you and appreciate your patience. Folks, if you'd like to give us a call at Falcon, the phone number is 352-375-7977. That's 352-375-7977. Thank you very much. Go Gators.
Bye-bye.